third-party express logistics service provider TCI Express has delivered robust quarterly performance in Q1 FY20. While top-line growth was sluggish for the second successive quarter, expansion in operating margin has actually lent support to operating profit. Let's do a three-point analysis to understand the earnings fine print and the outlook on the company. 1. What are the Q1 result highlights? Well, revenue for the quarter rose by just 3% year-on-year to over 250 crore rupees amid sluggish economic activity. Top line was driven by an equal combination of higher volumes and also price hikes. Now, demand continued to be weaker in automobile and engineering segments, but this was offset by incremental volumes from the small and medium enterprises segment. Now, operational performance remained robust as EBITDA came in at 10% ahead of last year at 30 crore rupees. Economies of scale along with price hikes and operating efficiency supported the expansion in operating margin to 11.6% in Q1. Now, improvement in revenue along with margin expansion trickled down to the bottom line as well, which improved 14% year-on-year. The company has repaid all its outstanding debt and has ended the quarter with cash surplus of 10 crore rupees. 2. What are the other key observations? Well, in Q1 FY20, the company invested 2 crore rupees in expansion of sorting centers and technology upgradation. For the full year, the company has revised its capital expenditure lower to 60 crores from 80 crores earlier, and the same will be majorly directed towards setting up of new sorting sectors in Pune and also Gurgaon. Post a tepid Q1, the business has actually seen some revival during July. The management is also targeting 17 to 18% of revenue growth in FY20, led by strong volume recovery in the second half of the current fiscal year. However, the targeted number appears very challenging as the slowdown has gripped multiple sectors of the economy. A multitude of factors such as tight liquidity, consumption slowdown, and also global trade war is also having a domino kind of an effect on the domestic economic growth. 3. What's the outlook on the company? Well, express logistics forms a small portion of the overall logistics market, and the demand for express cargo is anticipated to grow much faster. The medium to long-term outlook on TCIX also appears fairly robust on the back of structural reforms in the industry. Now, despite near-term weakness, we believe TCIX will actually continue to benefit from the emerging need for express delivery. The company is also among our top picks in the logistics sector, owing to its solid business fundamentals and also the proven record of execution. However, investors with a medium to long-term view should look to accumulate this stock on corrections.